To our next presentation with Mr. Cédric Jeannot, CEO of BeMobile Africa, who will speak to us about financial inclusion for Africa. Mr. Cédric.
Thank you. Where's the clicker? All right, good afternoon, everybody. My name is Cédric. I'm the co-founder and the CEO of BeMobile Africa. We are not a telecom company. We are a digital bank, actually. But when we started, we were not a bank, so couldn't call it a bank. So you see, I have a PhD, but I still can't get that. There we go. So our mission is to actually lift 100 million people out of poverty. It has nothing to do with banking. It's just purely a financial inclusion play. And the way you do financial inclusion, in our view, is through education, healthcare, or banking. And because we came from the bank world and the crypto world, we decided to do banking. So as of now, we are in 30 different African countries. We run about 22 African currencies and offer a range of services. So what I'm going to talk about today is I'm going to talk about how we got to this. Like when we started, what did we come across? What were some of the assumptions? And how we actually made that work. Because to say you do financial inclusion is one thing. To measure it and actually do it is something different. All right, so when people think about Africa, they think right slide, like pictures, safaris, beautiful landscapes. They don't necessarily think business. They don't realize that Africa is also a place where you can do business. And there's a lot of people, a lot of products, and a lot of things to do. This is a typical kind of market. But what people don't realize also is that Africa is just a continent. It's not one country. There's 54 countries. So you can find pretty much everything you want, from a very mature economy to a very emerging, no infrastructure economy. 1.2 billion population, growing. I don't even know what the statistics is because the population is keeping growing. And the vast majority of those consumers are below 25 years old. So it's a lot of future consumers that are extremely young. And if you look at the banking, it's still very, very unbanked. So while other places like Southeast Asia have gone through wallet and mobile money and all that stuff, in Africa, this massively remains a problem. So you have a few countries that have cracked the either banking sector or the mobile money with the telco, but by and large, if you look at the whole population, most people are still not connected to any financial services, which means it's informal, it's other ways, and when you do informal things, it's usually a lot more expensive. For example, if you think about the remittance market, when people send money home, all the companies that you see, all the marketing is actually from outside into Africa. Someone from Nigeria living in the US sending money back to Nigeria. Someone in France sending money to Congo. But that's only 10% of the global market. 90% is the intra-Africa market. Do you know how many companies focus on remittance intra-Africa? Not a single one. So essentially, most of the players take care of the 10%, and the 90% is still, I give money to someone who give money to someone, and eventually it reaches the country. So lots of opportunities. 70% of the entire economy is informal. Partially because of infrastructure, partially because even things like basic payment does not exist. So everything is cash, everything is informal. So you can't really build value-added services until you build the infrastructure. So this is, we operate across 30 markets, so we have a global view. But when you boil it down to in the unbanked population, what do people really care about? The most important thing is identity. Because most countries don't have an ID system, and even if they have an ID card, baby is born in the village, nobody registered the baby, you're not on the list of the government, you can't get an ID card. So identity is the very, very important one to do. The second one is peer-to-peer transaction. May seem basic if you're in the Western world. In Africa, just buying tomatoes at the market, like all those kind of like small macro transactions, no formal infrastructure. Then it's the cross-border payment, which is the sending money across different African countries, which is the one that everybody talks about, but essentially is only the third thing. Then it's savings and then lending. So people have a conception that access to capital and lending is the most important. In practice, it's not. And so when we build our bank, actually we build it in this order. primarily because that's what the customer wanted. So this is us. The model that we use, because we do financial inclusion, but we also like to make money and be for profit, we essentially have a free version for the consumer. So if you're low income, you'll never have to pay anything. Essentially, the banks is free. There's no monthly charge, no monthly minimum. There's no fee. There's nothing. And then we, as a business, make money on corporate. So someone may ask, but why, if you're a large company or corporate, do they really need you? They can get access to bank. Yes, they can. But most companies in Africa doing business intra-Africa don't have what they need, and that's our sweet spot. So let's say if you're a company like KFC or Heineken, you're a big conglomerate, of course you can go to a bank. But if you try to move money from South Africa to Botswana, you may be able to pull it off. From South Africa to Benin, it doesn't work. It has to go via Paris or London, and then the fees are very, very expensive. And those guys move a lot of money, so therefore having a digital solution that has a good kind of price point is quite important. Now, when you're a consumer, you have an app, you have a dashboard, you see a digital bank. We look like the ordinary bank, except that we have a mission. We focus on financial inclusion. If you actually pull behind the hood, the entire bank is built on blockchain. We are a fully decentralized bank, now called DeFi. So it's all on the blockchain, and the bank essentially runs fully automated. Outside of access to certain currencies and identity, everything else is decentralized. And why that's important is because that's how we break down the price point so that we could deliver a service that was good quality but at a low price point, so that a low-income person that earns $2 or $3 a day can actually use it. And so when we use blockchain, we are able to do this kind of things. So like, for example, if you look about cross-border transactions, so if you need to send money from one African country to another one, if you send money from, South Africa to Benin in West Africa, you have South African rand, you have to convert it to, let's say, euro or US dollars, and then you have to convert those US dollars back into the CFA franc, which is the money of Benin. That takes a lot of steps, a lot of fees, very expensive. You can't really compress it. So even if you have big volume, you'll get to a 3% kind of fee. In our case, we take the African currencies, we make stable coins out of it, so fiat-backed stable coins, and we use what's called an AMM, automated market maker. The same stuff that you use in crypto if you were to do like a crypto exchange, like a Uniswap. And with that, we're able to convert currencies and move them in real time at 20 times cheaper than what it cost. So the cost of providing that service to us is almost zero. So now you can make payment and FX essentially quasi-free. And so that payment network is actually open to anybody. We own it, we operate it, but it's open to anybody. So you can technically, anybody can come to our bank and get an account and move money in Africa in 30 countries, 22 currencies in real time and for free. So now once you have that, you can imagine the economical impact that this can have, because you are starting to take people who are not in the system, so you don't take a slice of the pie, you make the pie bigger, but also now you have a payment rail, so now I can do e-shopping, I can do e-commerce, I can do all kinds of other things. I can do micro-insurance because I can collect payment that you couldn't do before. So the last thing I want to leave you with is go in Africa, be a tourist, go see the safaris, but look at it from business, because Africa is open for business. There's a lot of opportunities, especially if you're in tech, if you're in the service economy. China is great, Asia is great, but there's a lot of opportunities in Africa, and there's just not that many players there. So we need more people to come and really build those value-added services, because there's lots of consumers that are just looking to use your product. Thanks. Any question?
Any questions for Mr. Jeannot from BeMobile and inclusion in Africa? Anyone? Oh, 1 second, I'm bringing the microphone to you.
Thank you for your speech at the first. At the first of your speech, you said 90% of people in Africa are untouched about the banking system. So how they deal with the routine? Are they?
So 45% are unbanked. So there's two. There's unbanked and underbanked. So unbanked is someone who doesn't have a bank account. So there's no way for them to deposit money somewhere and not have it. Like they have to have it in cash. Underbanked is people that may have a bank account but don't use it. For example, the bank will tell you, okay, you have to keep X amount of money, or you have to pay a monthly fee. So if you're in the low income bracket, those monthly, So essentially, it's all cash based. There's no other option than cash. And when you're in cash, then of course you're limited, because if you try to you go to a bank, you try to get credit. Can you prove your income? No, you can't. So the goal is to get cash into digital so then we can start tracking and have data so then we can enable more services. But it's all cash-based. And keep in mind that sometimes the cash is quite, you see the stuff with suitcases. Yeah, you try to buy a house, it's literally suitcases. And you have to count them one by one. So it's just very inefficient and therefore more expensive.
Any other question? Yes?
How do they get the cash in?
It's a very good question. So when you essentially dealing with exotic currency, so there's a bunch of regulation and things that you have to do with. The way we did it was we thought it was a very onerous proposition because you have to build essentially a distribution network. So we found a way to not do it by outsourcing it to our clients. So let's say we will sign up KFC as a client. The KFC store will become a cash-in, cash-out location. And so we have a fully distributed network. So the typical things will be Subway, KFC, because they're everywhere. Gas station. Anywhere you go in the middle of Mali, there's a Total gas station. And so we will go approach Total and say, hey, Total, we will do the FX for you. We'll do USD payment. We'll do banking. But in exchange, and the reason it works is a lot of those businesses are cash business. So Total has a pile of cash that they have to then pay someone to bring to the bank. So if you remove the liquidity, it's better, and then we just pay them back in US dollars. So our entire cash-in, cash-out network is distributed, but there are still a few countries where we're not allowed to collect because we don't have the appropriate license for that country. Yeah.
Thank you. Right over there. Yes?
So when you deal with local distributors or like Total, you said, what what's in it for the government operating in the country. For example, when you pay to Total, the government will be losing the value that they will be getting, and that value can be reutilized to build infrastructure, etc. Paying in USD for Total or other KFC, the government and the society will be losing the entire value from that particular transaction.
Good question, wrong assumption. So the assumption that if we win, someone loses is actually incorrect, and I'll tell you why. So we, in West Africa, one of the country, CFA, XOF, the currencies, no infrastructure, no digital. We built the entire payment system for the country. It's a country of 10 million people. And the government was very happy because, number one, they didn't have to pay for it. But two, now you can collect VAT. Now you can push government services. So essentially, the benefit that a government, plus the fact that, of course, it lifts people out of poverty, but the benefit to the government is actually much better than what people think. Now, when we pay back Total, actually Total is already paid by the government in US dollars because the oil business is in US dollar. But if we were to pay, let's say, KFC, we will pay in the local currency. So essentially, there's never anything to lose. And if it's something to lose, it's to the central bank. But the central bank is actually much happy to have that because we are a USD-denominated bank. So essentially, most African countries have issue getting foreign currency. So if you have a player that comes and is a USD player, it's very good for them because it increases the liquidity. So, my answer is simple, but essentially it took us 3 years to get the right model because you need the end consumer to have a benefit. The government has to also allow you and be supportive of you because else the red tape is unmanageable. And we still have to run a business. So over time, that's the business model that we came in, and we like to say we don't really take a slice of the pie, we try to make the pie bigger. And that's also why we opened the payment system, because you can do, COVID was a big problem. How do you give farmers relief in cash? Like those countries can be very big. So the cost of bringing the cash, counting who got the money, for us is one API, much easier.
Any other question for Mr. Cédric Jeannot?
Any difficult one or easy one?
All right.
Thank you very much, guys.
Now,
Thank you.
leading into the financial inclusion topic, let us welcome Mr. Alexander Hizikias of Equb. Alexander, come on stage. Same topic, different speaker.
Hello, everyone. My name is Alexander Hizikias, and I'm the co-founder and CEO of Equb Financial Technologies, PLC. And our company is based in Ethiopia, and today I'll be talking about how digital peer-to-peer savings groups and lending circles can help avail access to credit. So the biggest thing I want to mention is how difficult it is to actually source credit in Africa, in the African context. And one of the most prominent financial institutions in Ethiopia and Africa is rotational savings and credit associations. So what it means by that is it's a traditional system where people come together to contribute a certain fixed amount of funds to a pot, and that pot eventually goes to a person who wins the lottery. And this system has been able to provide credit to different SMEs, households, and the such. So when we're talking about access to credit and its credit scoring, by having to introduce this technology of a digital platform where these Roskas actually come to this platform and use to interact and save, we can mitigate or bridge these gaps of access to credit. So currently, the situation is very dire, and in order to source a $3 fund from any financial institution, one would need at least a dollar of the other way around. Actually, you'd need a $3 worth of collateral to source $1 worth of credit. So, and beyond that, we have a credit bureau that's basically non-existent, or very low data recording is occurring in that regard. So you have no credit reporting on behalf of the citizens, and no credit risk assessment, so people cannot use their financial information to source credit. So in Ethiopia, the population size stands 150 million people, and that's the market size. And you have 65% of those populations who are unbanked. And in Africa, that number is, for the population size, 1.4 billion, with 57% of people remaining underbanked. So this number can give you what the market can be, and if this informal institution can be digitized, we can then source funds much easily, and it's much more efficiently and conveniently as well. The Roska or Equb as an institution, the reason why it's becoming irrelevant are all these reasons. So amongst the savings groups, there exists a lot of bias and lottery draws, a lot of default risks, and lack of trust is one of those key factors that makes this institution very insignificant as of recent days. So what we did with Equb is Equb generally is a collateral-free, interest-free access to quick loans. So this is much more different than any banks or payment systems that anybody's used to. And by the way, Equb is a name that's given traditionally in the Ethiopian context, but if you go to the West Africa, and it's called Esusu, and if you go to Pakistan, Iran, East Asia, the same system is very familiar, so it's not confined to the geographical region of Ethiopia when we say Equb. So what we plan on doing is we plan on having a very decentralized system where people can accrue points. So then we have information or a digital footprint on every citizen or every member that actually uses this Equb system. So eventually these points are going to be used to avail microcredits or small loans to SMEs or any other individual member. So this is what we mean by collateral free. If a person or a community is marginalized by default, then they cannot access banks. And this institution can be leveraged to actually, this algorithm, this credit scoring system can be leveraged to give them much needed credit. To just give you the social element of what this stands for, Equb is basically a social solution to finance. And I know a lot of you are aware of this quote, all for one and one for all. So we're actually pushing this agenda, and By having to actually onboard every member, we can then source funds for all. So thank you for listening, and we plan on coming the next neobank of the people, and we plan on digitizing the traditional system and making credit available for everybody. Thank you for listening, and I'll be entertaining any questions if you have any.
Thank you, Alexander. Do we have any questions regarding the system of All for One? Anyone? Yes.
Sorry. Hi, good afternoon, everybody. First of all, great project. I love it. Just wondering what kind of, like how do you keep track or how do you build people's credit score? Like, it has to be like in other countries, like the US, you have Xperia, Equb, all of those. But are you taking the role of what all of those Equinox and all of that do? Are you creating your own, I don't know how to call that, but yeah, credit bureau. Thank you very much. Yeah, that's the word.
Okay. So basically, Equb is only one part of a person's financial responsibility when it comes to the Ethiopian context. So when you look at the financial credit worthiness in general, you would have to look at different expenses or utility payments or other payments that have to be made in order to reassure that this person is going to be able to pay loans or qualify for loans. So this system is usually cash-based. So by having to introduce this digital system, then we can track people's payments, and for example, for every on-time payment, you get an extra point. For every late payment, you get a point that's going to be removed. So you have this system is going to give you a sense of financial responsibility on a scale, basically. So you would have to contrast these numbers across other financial responsibilities. So we're not technically we're not covering the whole section of a person's utility payments and all these things, but this can be a good start.
Great, thank you.
Thank you.
Any other questions? Yes.
Yes. How many people are now on the system, in your system? What's the number that you reached?
Okay, so we've launched our MVP product, and in a matter of 90 to 120 days, we've managed to onboard at least 10,000 people. And off of those 10,000 users, 200 groups have been formed as the savings groups. And this is an MVP product that we just launched as a beta testing. But we plan on onboarding at least 100,000 by the end of 2023. And when we say this, technology adoption is at its infancy in Africa, in Ethiopia. So there's a lot of work to be done in the regards of go-to-market strategies and awareness programs, support helplines, and all these things. So once we've managed to actually do a large-scale activation, we plan on affecting at least millions of people's lives.
Did you discover something new after the people who joined? Like, did you change your model?
Oh, yes, definitely. We've gotten a lot of data from that. We've extracted a lot of data. So there was not enough secondary data to rely on in the first place. So a lot of our time and money was spent actually trying to test this product and receive the feedback. And based on that, we've managed to build Equb 2.0, which is going to be released in the next few months. So Equb 2.0 will have a better language options, better credit scoring system, and you have a user-friendly platform that everybody can use. And most of all, a lot of people cannot afford to buy smartphones in Africa. So we've managed to create a USSD platform for basic feature phones. So even the older generation is going to be able to access credit very easily.
Nice. Good luck.
Thank you.
One question over here.
Hey, so I bumped into the into the presentation in the middle of it, but I'm curious, are you guys pre-revenue?
Yes, we're pre-revenue, and we've been bootstrapped until now. And using this platform, I would like to express that we're officially fundraising at this point, and we have a good runway. We've built a good product that has garnered a lot of attention from media and organically as well. So yes, we're pre-revenue, but we'll be at least monetizing in the next 12 months.
And how can I get in touch with you to discuss some investment opportunities?
I'm going to be available for any of you who want to ask more questions, or I can give you my email. I'm right here.
Cool, thanks.
Thank you.
Thank you. Last question? Anyone? Fantastic initiative, Alexander Hizikias of Equb. Give him a warm hand of applause. Thank you.
Thank you very much.
And that wraps it up for the FinTech stage. Our last day. Thank you, Alex. Thank you. Okay, ladies and gentlemen, thank you very much for being a part of it. The FinTech stage, the sessions, the workshops. Thank you to the speakers. Most importantly, thank you to our partners and our sponsors for making this possible. The platform for information exchange and exchange of experiences has been phenomenal. Thank you, everyone. Wish you a fantastic afternoon. Bye-bye.